Hey there, everyone. I'm Dave Keller, founder of Market Misbehavior, president of Sierra Alpha Research, and so thankful to be here with you on StockCharts TV as we kick off Fed Week. We're recording this on Monday, December 16th, 2024. I would say, all eyes for investors are focused on the Federal Reserve, the Fed governors, Powell and company, and what they do at this December meeting. The market's basically, almost entirely pricing in a 25 basis point cut, although I've seen some debate from people like Ed Yardeni and other macro strategists that I respect, debating the pluses and minuses of doing that sort of thing this week. However, the market's certainly pricing that in. I think that's pretty much a foregone conclusion. So the real focus this week is going to be on what's next, and so that's why the discussion that sort of culminated in this likely rate cut is what's going to be so important. I think the press conference after the announcement around 2:30 Eastern on Wednesday is going to be vital, because that's where we'll get probably a lot of questions about the path for future rate cuts into the beginning of 2025. How many additional rate cuts we might have, sort of that terminal rate or what that final rate is most likely to be. And again, the trajectory or anticipated trajectory of those future rate cuts is what certainly could drive the markets between now and sort of the end of Q1 of 2025. So with that in mind, what do we do? What do we do now? I want to share with you 6 charts that I'm watching. One sort of macro chart, and then 4, actually that's 5, that's what that math is, right? 1, 2, 3, 4, 5. 5 charts that I'm going to share with you today. One is a macro chart talking about breadth conditions. I think I've talked a lot about the yield curve, and I've done some recent videos on StockCharts TV, which you should check out, talking about the interest rate environment, talking about the yield curve. And so I think I've kind of hit that pretty good. So please review those before Wednesday if possible. But what else should we be looking at? I would say conditions related to market breadth are pretty important. I would also say, even though we are not in the bulk of earnings season, there are some companies still reporting earnings, some of which I think have some really important implications going into the beginning of next year. So with that in mind, here are 5 charts that I'm watching closely during Fed week. Number one, and again, I try to pick some things that are a little off the radar, and one of them would be a measure of breadth called the Bullish Percent Index. Now, this is a breadth indicator, which I've not seen in a lot of places. I think StockCharts is pretty awesome for having these indicators available and frequently updated. The Bullish Percent Index is basically a breadth indicator based on point and figure charts. Now, let me bring up a point and figure chart just to kind of get an idea of what that app actually looks like. So we go to a point and figure chart. This is a methodology that was really born in the pits in Chicago, right, in the futures and commodities pits, where traders were looking for simple ways of charting price action. And one of the simplest ways was to take a piece of graph paper and, once a day, you look at the intraday high and low and you update the X's and O's on your chart. Now, to be honest with you, there are a number of different types of point and figure charts. There are called one-box point and figure charts, which are actually constructed first, which you would actually track during the day and would use to plot the price action using X's and O's. But it was done for simplicity. It was done that you could do it manually, pretty easy, by looking at the price action, looking at the chart, and adding an X or an O or a couple of those, and you'd be able to update the chart. Eventually, the market settled into what's called a 3-point reversal, which are a 3-box reversal, which is what the main version that you probably see on your StockCharts login is kind of built around. And that's sort of the generally accepted, simple point and figure methodology. The idea with this is, instead of plotting price over time, right? Instead of the x-axis representing time, the x-axis actually represents trend. So an uptrend is a column of X's. As the trend keeps going up, you keep adding X's. When the trend stops going up and you go down at least 3 boxes, you can see the scale on the right, then you go to a column of O's, and that's a downtrend. A column of X's is a new uptrend, column of O's is a new downtrend, column of X's is an uptrend, et cetera, et cetera, et cetera. So these columns could take days or weeks or months. The time is irrelevant. It's simply plotting the trend, and it's changing columns when the trend reverses enough that it triggers the next column. Now, one of the key basic buy signals on a point and figure chart is what's called a double top breakout. And Apple has a number of these here recently. This one right here is probably a classic example where you have a column of X's, you have a brief pullback, a column of O's, and then you have a column of X's. And the second column of X's goes one box higher than the previous one. So think of it as like the peak is here, and then we pull back, and then we make a new high. So it's kind of like a stock breaking to a new swing high, which is usually pretty good. That's called a double top breakout. That is the classic kind of standard buy signal. A sell signal would be the opposite, where you have column of O's that goes below the previous column of O's. Kind of what we just talked about, but flipped over, right? We go down, we go up a little bit, then we go down again, and we undercut the previous low, or the low of the previous column. So that's a stock making a new swing low. That's a classic sell signal. What the bullish percent index, and sorry, there's a long-winded introduction to this chart right here. If I can make it legible, here we go. This is the bullish percent index for the S&P 500, and in the bottom, the bullish percent index for the NASDAQ 100. This basically looks at the 500 members of the S&P and says, what's the most recent signal? One of those double top breakouts or one of those double bottom breakdowns? And whichever, if it was a bullish breakout, then that's counted as a positive count within these 500 charts. So as of today, as of the moment we're recording this, around 62% of the S&P 500 members have most recently given a buy signal. So arguably their point and figure chart is bullish. That's why it's called the bullish percent index. But also means about 40%, 38% and change are actually most recently flashing a sell signal. So what you can do with this is, instead of just looking at one chart of Apple and sort of analyzing that, what you can do, this actually aggregates hundreds of point and figure charts into one number. So basically says, out of all this bucket of universe of stocks, how many of them are bullish right about now? Now, the bullish percent index on the S&P 500 is kind of interesting, because at the end of September, it was around 80%, right? So 80%, 4 out of every 5 S&P names were in a bullish point and figure chart. As of today, that's around 62. So about 20% of the S&P have registered a sell signal since the end of September, right? So during Q4, 20% of the S&P, about 100 of those 500 stocks have registered a sell signal. So think about that for a minute. While the S&P is at or near all-time highs, where the NASDAQ 100 is at or near all-time highs, about 20% of the S&P 500 members have registered a sell signal. Think back to that point and figure chart, right? A sell signal is not just it pulled back a little bit. To register a sell signal, you have to actually retrace the previous column, which means you have to go down quite a bit. That's one of the real benefits of the point and figure charts, is that it actually has a lot of room for stocks to sort of chop around and be noisy. It waits for the actual trigger, which is the stock literally moves down enough to break that threshold and register a sell signal on the point and figure chart. So the bullish percent index going down by about 20% is not a small thing. That's actually a pretty major deal. Now, the reason why I wanted to show you this particular chart is from the end of September to now mid-December, 20% of the S&P has registered a sell signal. Let's look at that same comparison using the NASDAQ 100. At the end of September, which is around here, it actually pulled back a little bit. It was around 70, 75, but by the end of September, end of Q3, it was around 60%. So 6 out of every 10 NASDAQ 100 names. So now we're talking about large cap growth stocks. We're registering a bullish point figure chart. That number has actually gone up a little bit. It's up to 71%. So while 20% of the S&P have broken down on their point and figure charts, 10% of the NASDAQ 100 have actually registered a buy signal. They've actually improved. These are the conditions, I would say, facing us here in December of 2024, and it looks very similar to the end of Q1 of 2024, and I'll show you what I mean here in a moment. You know, we are at one of those times when a lot of things do not look as good as the major benchmarks, right? While the S&P and the NASDAQ kind of testing new highs, there are a lot of stocks that do not look that good. I think this chart tells that story very nicely. It's mega cap growth that is actually improving. It's mega cap growth that actually looks quite strong here, with over 70% of their members with a bullish point and figure chart. Compare that to the S&P. We don't have this for like the New York Composite Index, but I bet it would be even worse, because the smaller and less growthy you get in any universe, the worse the point and figure calculations are going to be, just because the growth, mega cap growth, is showing the best performance right now. I sort of alluded to a comparison back to early 2024. Let's talk about some similar kind of a similar kind of move here. I want you to look at this period. If you remember the beginning of this year, I know it's almost 12 months ago, but the end of the previous year, we had a major low at the end of October. We had rallied in November and December. Big question mark going into January was, will we continue strength? January was pretty good. February, March, all continued higher. But look at the breadth readings down here. In February and March, the bullish percent index on the, where are we at? Here we go. Oh, bullish percent index on the S&P 500 was actually trending higher from mid-February to late March. Compare that to the NASDAQ 100's bullish percent index, which was actually trending down during that period. So here we had February, March, more and more S&P names registering a buy signal from their point and figure chart, less and less NASDAQ 100 names registering a buy signal from their point and figure chart. In January and into February, the Magnificent Seven stocks were dominating, but then that changed. We had what's called a leadership rotation, where the Mag 7 names all started to cool off a bit, and a lot of other things, if you remember, it was like energy, industrials, materials, sort of emerged as new leadership. That's what happened soon after, and all of a sudden the bullish percent index on the S&P 500 started to improve, while the bullish percent index on the NASDAQ 100 started to deteriorate. At its worst point, at the April market low, we were down to around 24% of the NASDAQ 100 members that were showing a bullish point and figure chart. So, mega cap growth didn't just struggle. It flat out did not do well for a little while. Now, it didn't break down significantly in absolute terms, but the point and figure charts were broadly speaking in a period of deterioration. So here we can see that the bullish percent indexes can often help us understand leadership rotation. And when there's a disagreement between one of these indexes versus the other, that tells you where the leadership is. So right now, the leadership clearly in mega cap growth, clearly not in other things. That's certainly where the trend is. Going into the beginning of next year, I would be watching this chart very closely. And starting this week, I would certainly pay attention to it to see if we see a resumption, a renewed strength in the bullish percent index for the S&P 500, which would suggest that some of the other stuff is starting to improve. But to the contrary, if this remains low and if the bullish percent index on the NASDAQ gets lower, look out, and Q1 could be relatively painful, right? If both of these are deteriorating, that means a lot of stocks are starting to break down, and whether or not the major averages reflect that or not, that is the reality of what the charts are telling us. So that was sort of a bit of a deep discussion on point and figure methodologies, just to point out the fact that right now we have a disagreement between bullish percent indexes for the S&P and for the NASDAQ. I think that tells you about growth versus value and really the dominance of the Magnificent Seven. That has been a key theme for much of 2024, but certainly in the fourth quarter, that has been a serious theme. And the strongest charts that I'm seeing, generally speaking, are in some of those biggest names. At some point, that's probably going to change, and other things are going to do a catch-up trade, or the Magnificent Seven stocks start to cool down. And I think this chart could be a great way of sort of gauging that progression here over time. Now, I mentioned 4 other charts to watch about, and these are all to watch this week. And I would say, again, besides the Fed and all of these things, remember, there are some companies reporting earnings. And 4 that I want to highlight for you: Micron, one of the big semiconductor stocks; Lennar, a home builder; Nike, retail company, footwear maker; and Carnival Cruise Lines, right? Travel and tourism. Each one of these stocks at some point has been a strong performer, but each one of them has also had some periods of challenge here at some point in the last 12 months, or in the point of Nike at this very moment continuing to be relatively weak compared to other stocks. Earnings can often be a really interesting catalyst for charts like these. And so I wanted to sort of walk through each of them to really think about how you could maybe use some alerts to get ahead of some of these changes if the charts evolve with the announcement of earnings this week. So the first stock I want to talk to you about is Micron. Now, the semiconductor stocks have been relatively weak. While the NASDAQ 100 as a group has done very well, semiconductors have been kind of a rough part of that. NVIDIA actually just broke down today below support, was ticking below 132, which is a level we've been highlighting a lot on my show, Chart This with Dave Keller, my market recap show, which you should all tune in on for sure. Every weekday after the close, 5 p.m. Eastern, 2 p.m. Pacific. Don't forget to join me there. Now back to the chart of Micron. Semiconductors have not been as good as like software and other groups within technology. Micron bouncing a little bit, and it's actually been trading right around $100 a share. That's usually an interesting pivot point for stocks. 100 has sort of a psychological level that a lot of people pay attention to, a lot of investors. So for now, we're bouncing off of 100, but I wanted to highlight the fact that Micron for now is sort of sitting below its 200-day moving average and sitting below the September, October, November highs, which are all right around 115. So we've sort of bounced off support around 95. We're pushing a bit higher. We're back above the 50-day. We're testing the 200-day moving average today. Personally, I would be setting an alert to see, if and when Micron can push above 115. I'm actually jotting a note on my notepad right now just to make sure that I do that after the show because I meant to before and I didn't. I will do it right after. So with a chart like this, remember Jesse Livermore famously said there's a time to go long, a time to go short, and a time to go fishing. And his point of that quote, which I absolutely love and agree with, is the fact that sometimes the chart will give you an actionable entry point. It'll tell you this is a time you should probably go long or participate in an uptrend. There are other times when a chart gives a clear, sell signal and basically tells you this is a chart in an established downtrend. But there are other charts that are sort of sideways. They're sort of a question mark. They're unclear. They're probably a neutral rating. If you were rating stocks buy, sell, or neutral, probably be a neutral, right? Because it's not clear which way we're going. And his point is don't just trade just to trade. Wait for the chart to give you the signal, right? Or as I tell my 8-year-old son, wait for the good pitches, right? We want to wait for the right opportunity and not just swing just because we have a bat in our hands. Let's wait for the right opportunity to take a swing. So in my analysis, I would say Micron above 115 all of a sudden starts to be kind of a compelling chart because that would clear the highs of the last 4 months. That would mean we're above the 200-day moving average, which has been a challenge. And that could mean a resumption of the uptrend and maybe reapproaching previous highs for Micron in the 150. So the chart of Micron is pretty key. They're actually reporting earnings on Wednesday, and I would look to see if we can get above 115. And if we can, make sure we hold that level. Second of the four individual stocks I'll highlight for you is Lennar. Now, I mentioned all of these have had stronger periods in 2024, and in the first 8 or 9 months of the year, Lennar's a pretty good chart, and home builders like ETFs like the ITB or the XHB, pretty good charts, pretty consistent performers. However, September, we made a new all-time high for Lennar. October, we made a lower high. That was actually one of the first months we made a lower high in quite some time. We made another lower high in November, unfortunately stalling out at a descending 50-day moving average. And in the month of December, we've now broken below the 200-day moving average for the first time since October of 23. So this is a chart that had been in a very strong configuration, now showing quite a bit of weakness. They are also reporting earnings on Wednesday of this week. The other home builders really aren't on the radar, so be interested to see if Lennar gets some sort of positive signal here. Of course, the big question for things like home builders are interest rates, which is why it's an interesting name to be following this week as we maybe get some clarity on the Fed's game plan for 2025. However, if the long end of the curve, certainly like the 10-year point, can come down, which has not been the recent trend. If bonds rally and the 10-year yield comes down, that's where a lot of mortgages are kind of tied to that point. So if the long end of the curve comes down, that would certainly make houses more affordable for the average consumer, which would be a good thing for stocks like Lennar. Now, with this chart in particular, what's the alert? Two things I would be looking for here. Number one, anytime you have something below the 200-day moving average, I always want to see it regain the 200-day. That's what would allow me to, basically be cautious here in October of 23, but then be more optimistic when we push back above there and have a nice breakaway gap above the 200-day in early November of 23. That was a great sign that there were much better things to come. Seeing that sort of parallel move here going into January could be really encouraging. Positive earnings release this week could help to encourage that. We're oversold right now, so this is obviously one of the weaker momentum points we've been in a couple years. So the other thing I would look for would be a buy signal from an indicator like MACD. If you look at some of these times when the stock had been heading lower, like in May, June, July of 2024, it's often a good time to bring up an indicator like MACD or PPO. These are trend following indicators that are designed to register a buy signal when the bottom is actually in and we're actually rotating to a period of accumulation. The stock really needs to bounce higher to register a buy signal on an indicator like MACD. So on the daily chart, which is what I'm showing here, maybe on the weekly chart, if you're a little more cautious, wait for a buy signal from those to confirm that this downtrend in Lennar, which we've seen a number of times here in the last 18 months, buy signals from PPO or MACD could signify a bullish rotation and maybe the next move higher and a push above the 200-day moving average and beyond. So here I'd be looking for a buy signal from MACD or PPO. Personally, I usually use the weekly time frame for that, but if you're a little more aggressive and willing to take on a little more risk, the daily MACD or PPO could be helpful as well. I want to take a moment here, by the way, just to let you know we have an upcoming free event for market misbehavior. At the end of the year, I love to do an exercise which I call Trading Reflections. And this webcast is called Trading Reflections, 10 questions mindful investors ask at year end. I'm going to share with you the 10 questions I ask to evaluate my own performance, to try to take stock of the year, to sort of understand what went well, try to learn from what did not go so well, look at the opportunities I was able to identify, try to focus on some of the things that I missed so I can try to improve my decision making and improve my investment approach for years to come. You can sign up for that free event at marketmisbehavior.com/reflections, or just scan the QR code that you see on your screen. Hopefully we'll get a link in the description you can click on there as well. That's a free event coming up this Tuesday, December 17th. That's tomorrow of this week, 1 p.m. Eastern, 10 a.m. Pacific. And if you can't make it live, no worries. Just make sure you sign up, and we will get the replay out to you as soon as it is done. I will share with you the 10 questions I ask. I will talk through my answers, and I will encourage you to answer those questions yourself. Again, marketmisbehavior.com/reflections, or just sign up on the QR code that you see on your screen. All right, the fourth, or the third of the four charts, the individual stocks I want to share with you is Nike. Now, the chart of Nike is kind of a differentiated chart versus others because it is in a firmly established downtrend. This is a stock that's been going lower. It's below moving average resistance. We've been below a downward sloping 200-day moving average for the entirety of 2024. Paul Tudor Jones famously said nothing good happens below the 200-day moving average. I would generally agree with that assessment. So with this chart in particular, Nike could get a nice upside boost when they report earnings on Thursday of this week. I'm encouraged by the fact that we did make a higher low in November. That's higher than the July-August lows, which is encouraging. However, with a chart like this, I am happy patiently waiting for the stock to get above the 200-day moving average. So in this one in particular, I would just set an alert and say, tell me when Nike and others get above their 200-day moving average. That's when I want to focus on it. Until then, it's dead to me in so many ways. Finally, Carnival Cruise Lines, right? CCL. Now, this is a cruise line, right? And others like Norwegian, Royal Caribbean at times have been quite strong. And I would say CCL in the fourth quarter has been remarkably strong. Look at the strong price action above two upward sloping moving averages. The RSI has generally been quite positive, had been overbought, but actually came off of that region. So still some upside room potentially. And the relative performance has been off the charts good because it's been doing better than average. With this one in particular, I'm assuming that this chart is going to continue to go higher. I think of a chart like this as innocent until proven guilty. The chart of Nike, I would say guilty until proven innocent, right? Prove to me that the chart is better than I'm seeing, and then maybe I'll consider it. With Carnival Cruise Lines, I assume that the trend is up until proven otherwise. So something like this, I'd set an alert for when it breaks below the 50-day moving average. And until then, I'm probably happily riding this chart higher. Hopefully earnings this week, which I think they report on Friday, kind of a rare Friday report, hopefully gives us another leg higher, pushes us above $27 a share. However, a break below the 50-day moving average, while not the end of the world, could cause me maybe to revisit it. Now, those last, and really all of these charts, the point and figure, bullish percent indexes, the chart of Micron, and looking at a break above a key price level. Lennar with a PPO or MACD buy signal. Nike breaking above the 200-day moving average. Carnival Cruise Line breaking below the 50-day. All of those things are built into the StockCharts alert platform. When I think about a platform like StockCharts and what the real benefits are, scans and alerts are vital, because if you ignore scans, ignore alerts, you're just limiting your ability to follow the market effectively, you're limited your ability to react in a timely and efficient manner to when conditions change. We just highlighted 5 charts with 5 things we were waiting to see. So instead of having to keep those charts up on your screen and keep looking at them over and over and over just to see if it happened, don't let StockCharts do the work for you. Set the alert. So for example, tell me when Micron, which is this one right here, tell me when Micron breaks above 115. That would tell me we've cleared that resistance. We can say an important message. We can make sure we hit text and site notification and email. That means when this alert is triggered, you will get an email, you will get a text on your mobile device, you will get a banner at the top of the website. It will be really hard to miss that something is happening. So when something's a high conviction idea and you have a particular level or signal, I would encourage you to use the alerts platform. And some of the other things that use technical indicators, just use advanced alert. That's where you can use different technical indicators and all sorts of other tools to alert yourself when the opportunities may arise on some of these particular charts. That is it. I want to thank you guys so much for watching my content here on StockCharts TV. A lot of the great stuff is on my own channel called Market Misbehavior with Dave Keller. We do a live market recap every weekday after the close called Chart This with Dave Keller. I also do a Market Misbehavior podcast. I've talked with people like Tom Boley, T.G. Watkins, Frank Capillari, and many others. You can find all that on my YouTube channel, and I hope you will join me there as well. For Market Misbehavior, I'm Dave Keller. Remember, it's always a good time to own good charts.